What's up, Jeff?
Good morning, Ed. I would
What are
like our
you?
audience to know that we're talking about loans, and sometimes that comes across without the humor that Ed and I normally have. So he's been singing YMCA using FHA. So if you just could get a glimpse into how this podcast is starting.
That's right. Young man. FHA. We're going to
FHA
play.
loans.
I'm excited because once again, I don't see a lot of these. If you listen to the
Yeah.
VA loan, listen up, go back. If you haven't, you'll learn a lot about VA. And now we're going to talk about FHA.
Yep.
And I'm going to ask a statistic because that's the kind of guy I am. Jefi,
Okay. I
you're
got the
supposed
other
to
one.
say you
By the
did.
way,
So
our
when I
audience
say
should know.
Jefi, you're supposed to say what, Ed? Okay, so
Okay, what, Ed?
yeah, let me try it again. Jefi.
Mm-hmm. Yes, Ed.
Yes, Ed. I like that even better. What percentage of loans do you think are FHA in America?
36.
Wrong.
What?
Way off.
Really?
12%.
Really?
You really? And
I
it's
think-
up. It's up about 8% this year or in 2023, first
Wow.
part of 2023.
I was way
You're
off.
way
on
off.
that. Maybe for
So-
San Diego, it's a higher number.
Yeah, but still, it's that's a number out there, right?
Yeah.
And they're out there, and we need to be educated on what this is. So, hey, buyers out there listening, need to know what's going on with FHA. Sellers got to understand it. Agents, you might want to be clued in. So educate
right.
me.
Okay, so FHA loans, this is a Federal Housing Administration. That's what the FHA stands for, Federal Housing Administration. Something that's really interesting is they follow HUD, Housing and Urban Development Guidelines. And
HUD.
did you know that most loans, and when I say most, almost all follow those exact same guidelines because they're such a great guideline to follow. So most banks follow those too.
There we go. Fun
Yeah,
little
so that's
fact
a
from
really cool
Jefi.
fact. Yeah.
That's that one when I'm at my next cocktail event. I'm going to throw that out there just to kind of sober everybody up. That was good, Jeff. Thanks.
Okay.
I'm a little saucy today. So. Let's get into it.
Okay. Well, here's something. This is why this matters. And this is why this matters to you as a consumer. This is why this matters to you as a seller. And this is why this matters to you as an agent. The loan is one of the three legs of the stool of buying. If you don't have that piece under control, you're never going to get to the finish line. And an FHA loan, just like a VA loan, sometimes doesn't have the traction that other types of loans have. And that's not because of the loan. It's way more about misunderstanding what the loan really means.
Mm-hmm.
So I'm going to go through some of the pros on this one. You can have a lower down payment. Unlike a VA that's zero down, this has to have 3.5% minimum. You can put more
slow
down.
down. So
Yep.
3.5% is the minimum.
Is the minimum.
Gotcha. That's low.
Right. But think
That's
of,
good.
you
That's
know,
good.
these young families who are getting into these really expensive prices in the United States and having the option of a 3.5% down is very appealing.
Yeah, that totally
Okay.
is.
All right. You can get a gift from a family member as part of your down payment.
Nice. Hey, family members out there, I'm up for gifts. So
An FHA loan has a lower down or a lower credit score requirement. So they have equal interest rate to a lower credit score than a
which is
conventional
great
loan
for
does. Yeah.
people starting out.
Which is
It's
great. Yep.
it's a good option. That's awesome.
Higher income to debt ratios, which is where, that is how much money you make versus how much money you spend. If you have a VHA or an FHA loan, you can have higher debt to income. They have very competitive interest rates, which is awesome.
That's awesome in today's
And-
market.
Yep. And there's an FHA 203K loan, which is a loan that you can get to repair a property to a livable status. So those are not as popular for me in San Diego than an FHA loan is, but this is definitely something as a consumer you should check into if you're finding homes that need some love and care.
Yeah, that's a big one. Let's say you had a home that had some basement work, for example, that needed to be done, right? Then
that could
then
be
you
a
can
good
say,
one.
hey, that could be a good one. That's right. That's good stuff. What are the cons?
The cons to this one is mortgage insurance premium, MIP, which is also called PMI, private mortgage insurance. So there's two acronyms there that you should be aware of. That is actually an insurance policy for the bank who buys your loan. So if for any reason you as the consumer default, that bank is covered by that insurance. That insurance is not for you. It's actually for the bank.
Gotcha. Yep,
And
that's covering them.
And the only way to get rid of that monthly payment, which is based on your purchase price, is to refi out of the loan. So you can't get an appraisal saying you have X amount of equity. You can't, have X amount of time until it goes away. It stays for the life of the loan.
Yeah. So this is a really good point. So if you're in a scenario, say, listener, you're a young buyer, you're just getting started out, you're eating ramen for dinner to save for that down payment, and you finally worked it up to 3.5%. Then here's a way to get in, buy that home. You're going to have to pay that insurance piece, right? The PMI or the MIP. But then, you're in the game. And then once you've got enough going on and equity and money behind you, then you would refi out.
Right. Yeah, exactly.
Perfect.
And that gives you options. Something that a lot of people don't know is that the appraisal on an FHA loan stays with the address. So if you have a buyer who comes in who's getting an FHA loan and they get a low appraisal, and then you accept another FHA buyer, that appraisal goes with it, with the next buyer.
That's right.
Yeah.
Yeah. And that's actually a question on listing documents in North Carolina that has there been a recent FHA appraisal on this property?
Yeah.
Because it'll stick with
case
it.
number.
Yeah.
It will stick
so you
with
need
it.
to know that.
Yeah. There are loan limits, and these loan limits are county to county, not state to state. So San Diego currently has a very high one based on our sales prices. And then across the country, county by county, those numbers are a little bit lower. So you need to check in as a consumer. If you're going to use one of these loans, you want to know what your max loan limit is.
Gotcha.
Okay. It's important.
Yeah. I'm going to put you on the spot, and it's okay to say you don't know. Do you know what it is?
I do know what it is.
What is it in San Diego?
For San Diego?
I don't know what it is in Orange County.
Dang it. Let me find it.
That's okay.
I just got this yesterday. Okay, so for San Diego right now, our loan limit for FHA is $977,500.
Dang.
I know. And for California in general, unless it has like an exclusion to go higher, is $726,200. Okay, everybody, I just dated this podcast by giving you these numbers, but that's besides the point. The point is that you need to talk to your lender and find out what your area where you're buying, what your loan limit is.
Yeah. And so, hey, here's a homework assignment for all you agents out there. Call your lender. And this is for me too, because I don't know that number off the top of my head.
Yeah.
And just check for your counties that you work what the current FHA limits are.
Yep,
that's a really good number to know.
It is a really good number to know.
Yeah.
And unlike a VA loan, termite is not required. So if an appraiser comes out and says, oh, there's way too much termite damage here, then it would be required, but it would be a lender, appraiser requirement, not a loan requirement up front. So that's something to know. And also they're a little bit more lenient with like cracked windows and, things like that. So just kind of one step up from VA with a little bit more leniency. Another piece of this is, as an agent, if you're an agent listening to this, I would highly recommend that you understand what your FHA buyer is. So if you're in a point where you're receiving one offer, how far into their loan process are they? How strong is that buyer with FHA loans? What is the proof of funds that your buyer actually has, even though they're doing a 3.5% down? Get all of that information so you can educate your seller, because a lot of times these are great loans.
That's right. So let me ask you a strategery question.
A strategery?
Little strategy. So you're working with the buyer. They can go conventional, which we'll talk about on the next episode, or they can go FHA.
Yeah.
And you're getting ready to make an offer on a property. How do you counsel them in terms of whether they want to use the FHA on a multiple offer or go conventional?
So what I do is I actually submit the loan that's best for them. And I have a chat with them saying, if the seller comes back to us and says the only way they'll accept your offer is if you go conventional, are you willing to do that? Then I send in both approvals to the listing side so that they know that this beautiful borrower can do both styles of loan, but this is actually better for them. I also have my lender call and explain why. Because knowledge is power. You get that knowledge out there, then that agent is, giving that information to the seller.
Yeah. And another way to look at this, agents, is you want to make the agent on the other side an advocate. So make them look good, arm them.
Yeah.
So that when they're talking with their client, they can say, hey, this, I've talked to the lender, I've talked to the agent, this is how this works. They're not feeling like they're out on the edge of the diving board alone on it.
Correct.
So that's a really good point. Love that.
Yep.
Love it.
Okay. Everybody, whether you're a buyer, you're a seller, or you're an agent, call your lender and get the facts on FHA loans so that you can be educated. It's very important to know this stuff up front. Yeah.
Always call your lender.
Always call your lender.
That's right.
Ed and I are giving you bullet points, but always call your lender.
That's right.
Do you know what I feel like right now? I feel like those commercials where they have the drugs that you get for heartburn and, side effect, death.
That's right. The numbers given here is call your lender.
All right, you guys. We appreciate you. We appreciate you listening. We love your comments. So make sure you give some.
Appreciate you. Appreciate you.
Yeah.
We sure do. See y'all later.
Bye now.